way the market is right now, and that it's been for years, is that those hours can cost you a home sometimes. What happens a lot of times is that if you're a home buyer out there and you're talking to your real estate agent, they're going to put you in touch with a lender. And if that lender is out in the field trying to drum up business, then they're not going to be available to take your phone call and to get you pre-approved for a loan. Welcome to another episode of the Made to Be Great podcast. I am joined here with my very good friend and business partner, Vince Filardo. Vince, thank you for joining the show. I really appreciate having you here. This is the first time you've
Absolutely.
been in the studio,
Yeah.
I think, right?
Since you
Okay.
started it, yeah.
Yeah.
I saw the beginning phases.
Yeah. So we're going to get into some stuff today. We're going to talk a
Yeah.
little bit about the local market. We'll get into like maybe telling some stories about wins that we've had and
Yep.
kind of why we got there. But I want to kind of open it up and just give a little bit of background on our team and how we work together. We just recorded a nice piece of
Yeah. Everybody's gonna see.
content for that, so that was a lot of fun. Um, we've been working together now about 5 years.
Yeah, I think it's 5 years in March.
Yeah, so
5 years in March.
big milestone.
Yeah.
I mean,
It's
that's
crazy.
yeah, time,
Time
time.
does fly when you're having fun.
Yeah, it's been a great ride, and one of the things that I always have thought was fascinating about the mortgage business. I've been in the mortgage business in one way or another since 1998, and I've always thought that this job was two jobs. One is getting the loans,
Mhm.
and two is actually doing the work that it takes to take care of the client,
Yep.
right? And so we were talking about on the other piece of content that we did that we have those roles split up so
Yeah.
that we're not doing the same thing, and we can serve people
Yeah.
faster, you know.
Much better.
So like what happens a lot of times is that buyer, if you're a home buyer out there and you're talking to your real estate agent, you they going to put you in touch with a lender, and if that lender is out in the field trying to drum up business, then they're not going to be available to take your phone call
Exactly.
and to get you pre-approved for a loan.
Yep.
And so the way the market is right now, and that it's been for years, is that those hours can cost you a home sometimes.
Yeah, it can cost you a lot more than that.
Right?
Cost you a lot
Like
more
if
than
you
that.
see a home and
Yeah.
you wanna make an offer and you can't get your loan officer
Yeah.
quick to give you a real.
It's a big problem too nowadays. Like there's a lot of loan officers that you can barely get a hold of.
Yeah,
See it more often than not. That was kind of the idea behind the
the
team for
team,
us,
yeah.
honestly.
And a lot of team another distinction is that a lot of people, a majority of people in our industry, they do both jobs. They do
Right.
the getting the loans and the doing the loans. They do that together. And so what I think it makes a lot more sense is to have one person doing one. Let's just like if you had a restaurant, you wouldn't be expecting
Yep.
that the owner
You know I
is
like
gonna.
that one.
It's such a because everyone's been
I
to a
like that
restaurant,
analogy,
right? You've
yeah.
been to a
I
restaurant and
like
you
that
know,
one.
like you don't expect the owner to greet
Yeah,
you, seat
exactly.
you, take your order, cook your food, bring the food, ask you how the food is, manage the books. You don't expect the
Yeah,
owner to
no,
do. You know that there's people that do those different things to have a great
exactly.
service experience.
Everybody's an expert at the job that they do.
Yeah, and they do it efficiently.
Yep,
Imagine if you had to wait for the cook to come out and greet everyone in the
exactly.
it's like,
It'd be all night.
yeah, it'd be crazy, like,
Serve one person at a time.
the experience right?
Yeah,
The customer experience would be terrible,
crazy.
and so I think that's what happens so many times in the mortgage space. It's just so normal, you may not realize it unless you have a different
Yep.
experience, you
I
know?
think actually it's funny 'cause, um, Elisa's my brother-in-law was down, and it kinda got me thinking because we were already kinda talking about trying to really dial things in with the team side of things. He was actually saying, I believe it was Arturo Fuente or one of the bigger cigar companies. Um, the reason that most other cigar companies couldn't compete with them is because for every type of role they had a specific room for each that and that person who worked in that room only did that specific thing. So they were an expert at it. So you couldn't take someone who rolled a different way and put them in that room, and they could not
Mm,
roll that cigar the same exact way as the person who was doing it every day. So the ideal was consistency and have an expert at one thing. And then you have somebody who's an expert at one thing and they can do it really, really well versus
yeah,
trying to have somebody be an
yeah,
expert at everything because then most times how that turns out, no matter what it is you can't be an expert at every piece of it and give your all to every
mm-mm.
piece of it,
No, you can't.
even if you want to. There's always going to be something that you need to give up somewhere else or sacrifice somewhere else for time or efficiency or whatever. I thought that
Even
was
if you're
kind of funny.
capable, like,
Yeah.
that's the thing, that's the point of this whole, like,
Yeah, even if
thread
you're
is, like,
capable of doing it, there's
you
gonna be
physically
at
can't
some point
execute it
yeah, there's gonna be a
reliably.
sacrifice somewhere,
Yeah,
at some point.
yeah. Sometimes it will
So,
be great,
I thought it
sometimes
was
it will be
funny that
terrible.
we were talking about that, and I was like, it kinda assimilates to our situation where we're trying
Yeah,
to get it to one person's an expert at one side of things, one person's an expert on the other, and then there's that other one, I forgot what it is. It's the Eat the Frog.
yeah,
That one, I remember that from a while ago. That was like, sometimes you gotta just focus on the things that you're good at and admit the things that you're not so great at.
mm,
Um, what I mean? And lean into the things you're good at and try and source out the things that you're not good at, you know what I mean? To someone who or not even not good at, just something that you don't like doing.
yeah,
Source it to somebody who likes doing it. Like, I know you enjoy more of the prospecting and getting out there. I enjoy the numbers and the back end and the
and the
processes, like
process and the
yeah.
systems,
I
you've really
like I like the organization in the back end of things. I
yeah.
feel disorganized out in the field.
Yeah, and you've done a great job for what it's worth to you. You've done a great job dialing in the systems, always
Yeah,
kind of like keeping them updated and adjusting to
yeah,
market situations. And if we have an experience that we see something where we can improve, we're always
yep,
improving with the client experience in mind because in this market, you can't afford to not have a lender that can act quickly. We were talking about this at
yeah,
lunch.
yeah,
Is
you
that
can you need to.
yeah, like realtors, and this is since I've been in the business since 1998, this has been a consistent complaint from real estate agents is that their lender doesn't communicate with them. They don't know what exactly they're approved for. They don't know what the numbers are. They don't know how solid things are. And during the process, they don't know what's going on. Has the appraisal
Exactly.
been ordered? Like little things like that. And so lenders develop a reputation. And what happens is when you're out there and you find the home that you love and you write that offer, your agent writes that offer and submits it to the agent that's representing the seller. That agent is going to look, if they're good, they're going to look at who the lender is and do they trust that lender? Does that lender have a history of communicating? Does that lender have a history of
Mhm.
of closing on time,
Yep,
doing what they say? If you have two offers that are the same money and you have one lender that has a great local reputation, that agent, if they're good, they're going to probably recommend to take the offer with the lender that they trust.
yep.
And
Even
so
then, I see us get offers accepted just because of not a lot of lenders will even call the listing agent. So
yeah,
just a call to the listing agent. We may not be the most competitive offer, but the fact that I called the listing agent, I assured them that they would be communicated with. Like you said, communication is a huge thing.
it's
So
so
even
simple,
just
but it's
yeah,
just something that
even just calling and letting the listing agent like know like, "Hey, I'll communicate with you." So even if you have any offers on the table, just
yeah,
know I'm gonna communicate better than anyone else that you have on the table. So our offer may not be the highest offer, but you're gonna feel comfortable. You're gonna know what's going on the whole time. Your sellers are gonna be comfortable because 'cause you're
yeah,
gonna be able to keep them informed the whole time. Again, I think you say it all the time. It's just what's What more stress do you wanna deal with? Do you wanna deal
Yeah.
with a higher offer, but be stressed the whole entire process?
Which could fall apart. That's the point.
Exactly.
That's why
Even then too.
like the listing agent on the other side of that, on the other side of that, advising the seller, they're going to be thinking, what's the
Yep,
likelihood that this gets to closing based on who the lender is?
exactly.
And so these are things that, when you're a buyer and you're shopping for a lender, that the internet, Alexa, they don't tell you, hey, actually, you should check if your lender has a really solid
Yep,
reputation with local real estate agents, because that's a key, more of a key than I think a lot of people realize, of how much of a chance you
yeah.
have for your offer to be accepted.
'Cause we all
And
work
those,
together, so we all know each other. I know we've even gotten a couple deals accepted this year that were just like that. They were
yeah,
not the strongest offer, but we were the strongest lender, and we had already worked with a listing agent. We
and they
knew we had
trusted
a
us, and then
reputation.
yeah,
Exactly, and they accepted our offer just because they knew it was gonna get to the closing table at that point.
yeah,
I didn't even realize it until we started really kinda digging into things and changing the way we make offers, and I really started to see that, and now I even tell my agents like, "Hey, look, if you're looking to make an offer on this one, I know the listing agent on that one.
yeah,
So if we're competing, I know we've already got a competitive edge at that point because I
yeah,
already have worked with that listing agent. They know who I am. They know I'll get the loan done. They know I'll communicate. So I don't even have to say anything. As soon as that pre-approval comes across their table and they see that our name's on there,
yeah,
we've already got an advantage in that ball court with that agent at least in
yeah.
that offer, which
Yeah,
is
and
nice.
those are things that if you're a home buyer or a potential home buyer, these are things that you wanna know and that you should have in your corner
Yep,
that would be working for you rather than unknowingly working against you,
exactly.
So that is just, again, we're just trying to share things with people that will help you in your pursuit of becoming a
Yeah.
homeowner.
It's a little
And
behind the
these are
scenes stuff that
yeah.
nobody really figures out until they're actually
Sometimes
in
until
the
it's too late,
process.
sadly, and
Yeah,
they lose out on an offer, that's a tough way to learn. You guys aren't gonna learn like that because 'cause you're watching this show and you're getting the inside tips on
exactly.
how things are really working. So something else that I think would be really helpful for our listeners and our viewers is, let's talk about interest rate shopping, okay? Because this is something people are trained
Mhm.
to do, and they
Yep.
know, what to do. So, do you wanna share what's the behind the scenes on that? How should people really shop for rates? We talked about what to look for other than rates. You wanna look at their reviews, you wanna
Yeah.
see, like, hey, ask around. Do people trust this lender? What is the word on the street, and you can ask ChatGPT, you can ask, look around. Those are the non-price things. But when it comes to price, do is everyone like super transparent and crystal clear, or do people play games with the numbers? Do you want to
Always
talk
games.
about the
It's always games with most lenders, and I think that's the one thing that I looked at personally,
mm,
even when I was buying my home. Um, when I was going through the process, I more thought of it as how can I make people more comfortable
yeah,
and know that they're getting a good deal and know that I'm not trying to pull anything on them and show them that there is a better way to do this and that there's a more transparent way of doing this. Um, I mean, just this past week alone, I had a lender who gave a pre-approval, did not go over any numbers with the client, didn't tell them an interest rate. The client had no idea what they were getting into. They
wow,
just gave them a rate. They had no idea that that rate was coming at a cost to them. So besides that, they couldn't even really tell because they had no numbers to look at. So there was no way for them to tell that that interest rate was coming at a cost because they didn't see their closing costs. They didn't see a monthly payment. They had nothing to look at to compare. And I see a lot of lenders doing that to try and keep a competitive edge. And the way I look at it is if you have to do that to earn business, you're not doing business correctly and you're not doing it transparently and you're not doing it honestly. And that's what gives most of us a bad name is things like that where, a client sees something up front. they go under contract and they're like, "Hey, what's this extra $3,000 in here in points? And my closing costs are $3,000 higher than what it really should be."
Yeah.
And then, then they have to kinda learn the hard way that that's what it is, and then at that point, their rate goes up because now they don't want an interest rate with points,
Yeah.
things like that, and
And
even
points,
then.
for someone who doesn't know what that is, if they
Yeah,
haven't bought, points are a percentage of the loan amount,
yeah,
right? So if you have a $500,000 loan, 1 point would
yeah,
be
yeah, you can
$5,000.
pay to get that lower
So
interest rate.
some lenders I've seen, they're quoting rates with
Yeah, they
2
quote it with a
points, 3
point or 2.
points,
Yep.
and it's like, "Whoa, yeah, of
So it
course their
looks
rate's gonna
amazing.
look
Yeah,
better
it
because they're
looks
charging you
amazing
like
up front, yeah,
5
but
to 15 grand."
when you break it down, I mean, what I do with most of our clients is I'll show them, yeah, you can buy points if you want to. You
Mhm.
can, but it needs to make sense.
Yeah,
You need to recuperate those points in a reasonable amount of time. So if you're gonna buy points and it's gonna save you $200 a month to get a lower interest rate, or it's gonna make you qualify, those are like the 2 biggest reasons to buy points in today's market. You wanna make sure that you are making that money that you spent back as quickly as possible.
yeah.
If you're not making that money back within 2, 3 years, it really starts making less and less sense because most people, I mean, nowadays, most people are only in a mortgage for what, 5 years?
Yeah,
About the
the numbers
average?
are changing. I think historical average is
Yeah,
more like 4 or 5. I think
4 or
recently
5
it's
years.
pushed to maybe 7 or something, but, the big wild card now is that will it be, will you be able to refinance in a couple
Right,
years? I mean,
exactly.
who we don't know. I mean, people have been calling for
I mean,
refinance
that's the
wave
idea
for,
too.
but
If you're
it's,
planning on refinancing, I use that one too. If you're planning on refinancing in 2 years, you may as well keep that money in your pocket
yeah,
and just hold on to it and then throw that money into getting the lowest rate possible when you refi,
yeah.
because 'cause you're gonna have that loan for a couple of years.
Theoretically, right,
Yeah,
because the only the biggest benefit of refinancing is there's 2. One would be if you have other non-mortgage debt that you want to roll into the mortgage, if you've accumulated some equity, you wanna put that into your mortgage and lower the payment. Let's say you have a bunch of equity, but you have like $1,500 a month of credit card minimum payments, and you're worried that you won't be able to chunk it down. If you can even get your mortgage payment to be the same or a couple $100 more, that could be a really nice net savings that you can recover quickly. Um, the more obvious one is just to straight lower the rate
yeah,
and get a
exactly.
lower payment.
Yeah. This is a
Um,
common one right now for
and
most
so
people.
those are things that really are, you need to have a discussion with a
Right.
professional and look at the numbers, because
Yeah.
there's not really a one size fits all kind of number for that,
There's
because
really
it's
not.
so many variables. The biggest one is how long are you going to be in the house? How long do you think you're going to be in the house? And how long do you think you're going to have the mortgage? Because that might not be the same answer. Like somebody, if they're buying their first home and they're thinking of having, a larger home, or being in a different area in 5 years or
Yeah,
something, they
exactly.
might want to keep that home as a rental. So even though they might not plan on living there, they might keep that mortgage for longer.
Right.
So these are all questions to
Yeah.
talk to a professional
That's what
about.
we're here for,
Yeah.
to kind of figure that out and figure out what the best option is. I mean, I even had one recently, I think I made the post about it,
Mm.
where, the client servicer actually gave her a rate. She already had a 6% interest rate, so it was already
Which
low
for
as
market, if you're
is.
listening to this later, like
Yeah,
that's
it was
already
it
a low
was
rate.
great for
Yeah.
what the timing is. This I think was a few months ago, and she had just bought the house, so they had just
Mhm. I
closed
remember
on it
that one.
too.
Yeah.
Yeah, like couple months. We're talking like maybe
That's
less
your
than
first
6
red
months.
flag
Yeah,
because usually like it's not that big of
yeah.
a savings in that short amount of time to
Exactly, and you
justify.
just bought the home, so you haven't really even paid it off. So
Yeah.
for her, regardless of anything, she was gonna raise the loan amount higher than what she started with because she
Mhm.
hadn't paid enough down, there wasn't enough equity yet. So that was already problem number 1. Problem number 2 was not only was it gonna cost her the money to do that refinance, and she was gonna roll it in, so now she has a higher
Higher
loan
mortgage
amount.
balance,
From
less
that,
equity.
it quoted her the interest rate with $11,000 in points. So it was
And she
$11,000 in
didn't
points.
she
Yep.
probably wasn't super clear on that up front.
She ended up sending it to me to take a look at because she was like, "Hey, look, they sent me this. This is a good deal." And I was like, "I mean, it looks like a good deal, but when you really read that little tiny print in the bottom, you can see that that deal is going to cost you almost $21,000." And it wouldn't have been that big a deal again if she had a reason to refinance that was actually going to save her the money. But with that cost that she was going to accrue just from that, I think it was gonna take her like 10 years or something like that to
Mm,
recuperate what she was saving to what she paid. So it was gonna take her
which 10
almost
years
10
is
years.
crazy. 10 years, I would never.
No,
I mean, maybe I shouldn't say never, but I can't think of a scenario
no.
that I would suggest that someone do a refinance
It
where it
was
takes
more of
10
a
years to.
sales tactic to try and just pick up the business or whatever, and it was not in her best interest whatsoever. And she realized that immediately when we started talking numbers, and I was like, "Look, this is gonna cost you around like 20,000. Your mortgage is gonna be 20,000 higher than what you even started with." And the second thing that most
Mm,
people don't think about too is when you're doing that, so she was gonna save, I think it was like $300 a month or something like that with lowering the interest rate, maybe a little bit less. Now on top of that, she's rolling in $20,000 into the loan. So really at the end of the day, she was looking at saving maybe 120, I think it was like 120 to $150 a month is what she was looking at saving
mm,
for $20,000. So she was looking at minimal because it looks great when
yeah.
you're lowering your interest rate. But what most people don't talk about is when you're rolling in all of those costs into the loan, you're not saving on that interest rate difference now. You went from $300 to now you might only be saving $150 or $100 a month.
Mhm.
Now that refi starts to make even less sense because
Yeah.
even though you have a lower interest rate, you may be saving on interest, but if you're paying $25,000 to do that refi and get that rate, you're not making that back for 10 years. And then if your idea is to refinance when rates go even lower, you're just gonna put yourself in an even worse position at that point, point. Because now you're
Mhm.
gonna roll in another 10 or 20 or whatever. So now you're digging yourself a hole into a home where if you aren't building equity quick enough, you could get stuck in that house for, more than you even thought you could
Mhm.
and be losing money by the time you try and sell it. So that's
Yeah.
another big thing that I ended up talking about with that
Especially
client.
early in the process,
Yeah,
right? Because I
that
talked
early.
about this on a recent episode is that most of your equity in the first like 5 years comes from home value growth, not necessarily mortgage pay down, because your first payments on the loan, much more of that payment goes to principal
Exactly.
or interest rather. So very little goes to principal starting up front. So if you are in the early stages of your loan and you're increasing your loan amount by $20,000,
Yep.
it could put you in a position where, like, let's say this person gets transferred to Idaho
Yep.
from Orlando,
And what do
and
you do?
now they have to sell the home. And now maybe you're a little upside down once you look at selling costs. If you put 3 or 5% down when you bought it, you immediately refinance, add 20,000 to the. So these are reasons why you want to deal with the trusted local professional, whether it's us or someone else. You want to work with someone, not,
Preferably us.
I mean, preferably us, but I'm just saying, like,
That way we can
the,
make sure you get the
yeah,
correct
we can make
service.
sure, but like what you
But
don't
yes.
want to do is you don't want to deal with a call center. You
Yep.
don't want to deal with an online lender. These people are paid very small numbers, like $100, $200. And why I'm saying that for context is it's impossible to get a professional to, so they have to do so many loans that like it's literally you're a number. Like you're just
I think
churn
the
and
best thing
burn.
I was ever told about those is somebody called them order takers.
Yeah, so
Just
they're
an
not
order
doing the
taker.
best thing for you.
Nope.
They're doing what their company told them to do.
Exactly.
Many times that's in conflict with what serves the client. And
Mhm.
that stuff, I can't sleep at night
No,
with
I hate
that.
it.
And it's like,
Every time I see someone leave me or consider that or come in from that, it hurts my heart a little bit
yeah,
every single time.
Yeah, me too. It's because we just wanna take care of people,
Yeah,
and so make sure you shop your lender's heart. Like, try to get a vibe for and the same with your real
yep,
estate agent, like, we were talking at lunch, like, that group that we had lunch with, like, they're just amazing people,
yep, they definitely are.
and you want someone like that in your corner, someone
They
who
care.
cares what they do, who cares about taking care of you as a client, and does the right thing because that like, the other people on the other side of the transaction that are in charge of you getting the house you want or not,
Yep,
they know those people,
exactly.
and it so for whatever that's worth, changing the subject a little bit, um, let's tell a couple stories. Let's tell a couple
Sure.
stories on, um, let's
I
talk
know we
about
have some of those.
yeah, so I mean, let's draw the people into the situation. So, um we one day Coca-Cola is gonna cut us a check
Mhm.
because we're just out here on the streets representing, and I'm just gonna speak that into existence because good lord.
Coca-Cola.
I mean, people tell me they text me and they say, um, "I saw a Coke Zero and I thought about you," and I'm like, "Yo, Coca-Cola, hit us up, bro. We're
One of
helping
these
you out over
days.
here."
One of these days, the
It
marketing
will
team needs to reach
it's
out for
just a matter of
Coca-Cola.
time. It's just a matter of time. So, anyways, as we sip our Coke Zero, we're gonna just share a couple stories. So it would be cool to talk about one where somebody came to us and they weren't sure that they could buy, or they weren't sure that they could buy that house. Um, and we made the numbers work. You figured out a way to solve the problem because this is part of the real stuff
Yeah,
of our business is like, sometimes people think they I can't buy a home, I'm not ready yet, or I don't show enough income on my tax returns,
yep.
or, um, so I don't know if we have a
I've
story
got
top of mind
plenty.
where you can share,
Yep.
like,
I
somebody who
got
you
one from
helped?
this week. Yeah, I
Alright,
got one
boom.
from so
I'm
we'll
not
start right off the
surprised.
bat.
I'm not surprised.
So the client was very they had worked with another lender. Same story. They had gotten pre-approved with another lender, but they hadn't really gotten any numbers or anything like that. They weren't too sure of what things were looking like. They didn't have too much cash to close, so they weren't really sure how they were going to make it work.
Mm.
Um, and they weren't really sure where they were, like, approved to, and they wanted to go a little higher in purchase price, and, when they started exploring the market, they were curious what their actual options were. So the other lender approved them to 250. They didn't even know if they were using a down payment assistance program or not. All they knew was that they were approved for an FHA loan to 200 or 240,000. Uh, I forgot the interest rate. I think at the time it was before everything happened, they were at like a 5.7, I believe, or something like that, which I'm sure also had some points in it too.
Everything happened, if you're
Um,
watching this later,
yeah,
is like the United States started bombing Iran
yes.
and oil markets are disrupted and
And
it kind of like threw mortgage bonds and
yeah,
mortgage rates into chaos. So we went from like best rates in a while to like back to the recent
yeah,
highs. So
but
if you're watching this later and you're not watching this when this is airing in late March of 2026, that's what he's talking about there.
yeah.
Sorry.
So they really didn't even know what their loan setup was. They had absolutely 0 idea. Again, they didn't even know if they were using down payment assistance. They didn't know what their loan setup was, what their options were.
Sounds very
So
confusing and terrifying.
exactly. So they really had no idea. So we went through the approval process and we basically set it up to where they were actually approved up to 280,000. Now to get there they would need some seller credits, but we worked it out to where if they wanted to get to 280,000, they could still have enough cash on hand if they asked for seller credits.
Hmm.
So we set everything up to where they could either use the down payment assistance. They had a few different options that they didn't even know about. So they could use the down payment assistance if they wanted to. That was one option if they were under a certain purchase price. They could get up to 280 with $10,000 in seller credits if they wanted to, or they could hit somewhere in between and do like a 250 and do seller credits that way. Um,
Why
so
that's important is I don't want to steal
yeah,
the story, but just to interject on that, why that's so important is when you're working with a professional like you, is you can get an option that maybe you didn't know
yeah,
existed. Like if you thought, hey, I could only buy a home with down payment assistance, the thing that it is
exactly.
not jumping out at most people with that is that program has a lower debt to income maximum.
Yep,
So what that means is you need more income to qualify for the same price of home versus a regular conventional or FHA loan.
yep.
You need less income to buy
Plus a
more
higher
home.
rate too. So like they with their situation, with down payment assistance, they could get up to only 250
Mm.
without because they got a lower interest rate. Um, without the down payment assistance, that allowed them to get up to 280. Plus, I had a little more room in that as well, which allowed them to get much higher. And
So,
the
because
only
that
thing
could
they had
be
to ask for seller
a
credit.
difference between like the neighborhood you really want or
Yep,
the school zone you really want
exactly.
to maybe not
Yeah.
what you want.
You'd be
And so,
surprised what the difference is.
yeah,
But that's a matter that was a prime example of what the difference is.
yeah,
They had no idea these options were even available to them and that they could set it up this way and that they could get higher. And even then we set it up to where like, hey guys, whenever you find something that you like, send it over and we'll literally tailor the deal to where you are comfortable. So when you go to make an offer, which we also go over again, there's a difference between a reasonable offer and and
right.
like lowballing out here. So we went, like, hey, we'll set this up to where it's a reasonable offer, but you guys are comfortable with it
Yeah,
and then the realtor also knows exactly what they need to ask for as well.
yeah.
So instead of going in blind and
Nobody's
just
in the dark.
asking for whatever, they know what their minimum ask is. So
Yeah,
they can go in and ask for a lot more. And they know once they negotiate to this point, that is our stopping point as far as that goes. That was a great example. Um, this week of just the difference between working with I believe it was a call center too. I think it might have been a bank or something like that that they were working with. They never told me the lender, but it was a great example of like they hadn't been shown anything. They had no idea what was going on. And even then, I don't even know if the lender pulled their credit because they had a couple things that they needed to fix credit wise,
mm,
which we got even that fixed up in 2 days, which could have been a problem when they actually got a contract too.
yeah.
So we ended up turning that around in 2 days too.
So, two people that I want to talk to right now about that story that Vince just explained is if you are someone who is thinking about wanting to own a home and you're not crystal clear on what your options are, or you would like to buy a home in this neighborhood for this much, but it's a little more than what your lender told you, you might be able to get the
Yep,
home that you really want by talking to a professional like Vince.
yep,
And if you're a real estate agent listening to this, these are the things where, this is not just a platitude like, hey, work with us, we'll help you get more business. These are real examples of how a client who was referred to us from one of our trusted real estate partners actually probably wouldn't have had a contract and wouldn't have been able to help this buyer become a homeowner had it not been for the advice and the
yep,
care that Vince took to explain all those things and communicate with everyone else in the process. So
exactly.
these things are so important to people who are shopping for a home and for real estate agents who want to um, level up what they're doing
Yeah,
because you probably, if you're a real estate agent, you probably don't have a problem with not enough clients or leads. You may have a problem with your lender leaking transactions for you by not doing the work
yeah,
that Vince is
not
talking
digging in
about
that
here.
much. I see
Because
it too much.
and another thing that happens is that I see far too often, and this is not trying to be a bash session for other lenders. This is we're just trying to give
Just
you real
information,
talk
what we
about
see out there.
what's
Yeah,
happening. Yeah, because like another thing we see and you probably have some stories about this that you could think of right away, is where the loan takes a little bit of work to structure.
yeah,
Like there's some things we maybe have to pay down, something to exclude, maybe add what we call a non-occupant co-borrower. So most people would think of that as like a co-signer. So there's things that can be done creatively that
yeah.
require some
Figure it
elbow
out.
grease that and we've seen that time and time again of
Yeah,
people coming to us and like, oh, I don't know if I could do it because
you just need to
so and
work on
so
it.
either
Credit,
ghosted me,
things like that
they'll
too.
ghost, or
Yep,
they'll just say, oh, you can't get approved.
yep.
Because it's not that you can't be approved, it's that they don't want to do the work or they
Yeah,
don't
to
know
get it done.
how to do the work.
Right.
So And I don't know which is worse or which happens more, but the bottom line is that you want to talk to Vince. You want
Pretty much.
he is gonna hook
I'm
you
here
up.
to figure it out. If
Yeah,
I can't, my motto now is if I can't do it, nobody can. Let me
yeah.
put it that way.
That's what
I've been digging into that one lately.
that's how we sleep good at night, is we
Yeah.
know that we are either gonna help you find a way to get the house you want, or we're gonna be able to explain in very good detail
Yep.
what it would take to do it if you can't do it right now.
Exactly.
And so that's the difference where with us is the care and the intention of helping everyone to get what they're trying to get and not just
Yep.
being like, "Oh, this is a little bit of work. Well,
Mm.
nope, sorry, you can't
Yeah. Too
qualify."
bad. I
You
hate
know?
seeing it.
Yeah.
Honestly, it's the saddest thing to see nowadays.
Yeah.
So,
Yeah. We have seen our share of those. So it's the other thing I thought would be cool to mention is I really have been diving into some of the numbers in our market for sales per year, home sales per year. And why this is important is if you're someone listening to this and you're thinking, I want to wait until rates get to X, fill in the blank, whatever the rate is that you're thinking, six and a quarter, six, 5.75. If you're someone who is waiting for that interest rate, I keep hearing national numbers. And if you do the research, you can ask ChatGPT, you can Google this, you can ask your favorite AI. You'll see that there's about 4 million sales that happens nationwide in the US, no matter what the economic conditions are is just kind of the floor for transactions. And so that got me thinking, okay, well, buyers I'm talking to they're not looking at homes across the whole United States. They're looking at homes in Orlando, Florida, or in Tampa, Florida, or in Jacksonville,
yep.
Florida. So I'm like, let me dive into these numbers. What is it really? And so for Central Florida, the greater Central Florida market, I looked at 2015 to 2025, and they're a little different each year, but it went from roughly about 35,000 sales a year. These are existing home sales, excluding new construction. And um, since rates have elevated, that has dropped down. We've lost since 2022 when rates escalated, we've lost at least 22,000 sales. And so if you're thinking, and the more the rates stay elevated right now, they're back near the mid sixes
Mm.
on a 30-year fixed
Yeah.
with
About
no
there.
points. And so why that's important is if we see, which eventually we will, no one knows when, but when it happens, it's going to be sudden, probably too fast for you to make an adjustment and beat the rush. There's going to be events, whether it's Fed meetings or policy, and it's going to happen quickly. Rates could fall from 6.5 to 5.75 in a matter of days or weeks or a day. Um, it could happen very, very quickly. And so if you look at like maybe the floor for sales in Central Florida area is 25,000 existing home sales. Right now, at the time this is being recorded in March of 2026, we're missing at least 22,000 sales. So from the floor, basically you have almost double the transactions that could happen that year whenever that happens. So inventory is not going to fall from the sky out of nowhere. New home builders, they take time to build homes. Analyst that's a national speaker with Housing Wire, he's one of their lead economists, Logan Mohtashami. He says often on his daily podcast, builders are not the march of dimes. They're not going to overbuild. That happened to them during the Great Recession. They're never going to do that again. And so, where are those homes going to come from? So, what's going to happen is conditions are going to get very hard as a home buyer very quickly, probably more quickly than you can. A great analogy for that would be it would be like kind of waiting until you start to crash into another car and then put on your seatbelt. You're probably going to go through the windshield.
Yep.
Like you're not going to be able to do it that fast. So,
Buyers are getting great deals right now.
yeah.
Buyers are getting fantastic deals
They're getting
because there's no
closing
competition.
cost credits.
Yep.
It's very, it's not like crazy buyer's market. Like you can offer 400,000 on a $500,000 home,
Yeah.
but a home that's asking 525 that should be asking five, you might be able to get it for
Yep.
five.
Might get a
Whereas,
couple thousand off.
and get some credit. Whereas when this shift happens, that's out the
Yep.
window because they're going to have It's probably not gonna be like COVID times 20 and 21 because I don't think we'll get that low on the rates, and that was
Really.
an unsustainable increase in value that
Yeah.
but anything 6 or under on the rate
I mean, we saw it in
is gonna be
January alone.
yeah. January was
January.
like
Yeah,
gangbusters n
January, we
applications.
had applications out the door and, contracts coming in, because people
More
qualified,
people
the
qualify,
rates
you
were
can get the
low.
house you want, you can
Yep.
get maybe a little nicer house than you
Yeah,
even
you had the
thought you were
best of
gonna
both
get.
worlds, and
Yeah,
you were still getting sellers offering
yeah,
concessions and things like that too. But we were starting to see a little bit of that competition come back at that
yeah,
time as well,
yeah,
which goes the opposite way.
right.
Then you start losing out on those deals versus right now, even if rates are a little higher, I mean,
It's such a small
realistically,
difference in the payment. That's the thing. I think
yeah.
people get, like, laser focused on the
I think
rate.
people listen to the news a little bit much sometimes, I feel like, and it's kinda like, you hear me preach it all the
Yeah.
time, like, about it's you can't time the market, it's whenever you are ready to buy. Personally, I think I don't even know if you remember, but,
Mm,
no, I did that with my own house. I waited forever just because I was waiting for the perfect time and to be set up perfectly and get the perfect deal and all that, um and then when we finally decided to trigger, we got the perfect deal landed right in our lap at that
mm,
time. Um, and it kinda grew into being the perfect place and the perfect deal and the perfect setup at that time. Um, and now we have a house.
and you probably have a nice
Yeah.
amount of equity.
Yeah, we have a decent amount of
So,
equity at this point after all of these years, and putting work into it and effort into it, but it was more or less like we got to that point personally too, where it was like, "Look, I don't really care. I just wanna buy a home and own a home and stop, throwing money into rent every month."
yeah.
My personal rental home I had, I think you remember the stories about the well.
Oh, yeah.
Had the well, so I was
Yeah,
spending money maintaining the well and
yeah.
putting chlorine
And
in
this was a
there.
house you were renting.
Yeah, we were
So,
renting. I fixed up half the house. I put new light bulbs
yeah,
in. I
I
changed the
remember that.
fixtures in the
Wow.
bathroom because that broke. I redid tile, all kinds of stuff. I
So
did
for those people
flooring.
who think, like, when
Yeah,
you're renting, you have no issues, maybe
yeah,
you have no
yeah.
issues, but maybe you have
I mean, it comes
homeowner
down to
issues.
2 even. You got 2 options. So the reason we even put so much work into that little rental house is because I had 2 options. Deal with it for months on end
If your
until
landlord's not
right,
responding and then
until
yeah,
and we had a
yeah.
big company at that time that was managing the
Oh, that's
property.
right.
So it wasn't even a private landlord. So to get anything done, it was months on end and it was arguing back and forth because we would submit a claim, they review it, they say, "No, we're not gonna fix it."
Meanwhile,
And you
the
gotta
lights are
submit it
out in your
again.
bathroom. It's like, what are you
Exactly,
gonna
yeah.
do? I
The
mean,
the one time, the biggest issue was the water smelled so terribly, and it was because the water system they had I found out later, the water system they originally installed was just insufficient. So
mm,
no matter what you did, no matter how you balanced it, the water was always gonna smell and not be what it should be because they just didn't spend enough money. So it took us
hmm,
forever to try and get, we got a water softener and, a couple other things finally later, and that finally eliminated, but it took us 3 months, 4 months to even get them to say yes to installing that.
dang.
So, for months, we were dealing with that, and you're throwing money into something like that. At least if it was my own home and I'm putting money into something like that, it's
You're
not
getting
that
a
bad.
home
Right.
value growth by
I'm
appreciation.
not
You're paying
spending my
some
money
down on the
on
mortgage.
0, and
Yeah,
and and instead, they got to reap the benefits, which,
yeah.
oddly enough, after we had moved out, they had sold the home for, like, a good $100,000 more than what they paid for it, and it
Mm,
was in mint condition.
oh,
We
thanks to
actually
you.
looked at the we were
You're like,
laughing
slide me some of
because
that 100
we
grand.
looked at the photos, they left everything exactly like I had left it. So,
Mm,
like, when we fixed everything up, all they did was go in, they cleaned everything, left it as it is, and sold it as is, and just got
wow.
rid of it at that point. So all the upgrades we had made and everything like that, they basically got to reap the benefits of that. Because there was a few things we upgraded, like, I think I replaced a couple fans and things like that. Like I said, I did flooring. I did some stuff in the backyard just because it was a necessity. Um, we were there for 3 years, so it was like just something we're gonna get use out of, um, but
So hang on. So
money into someone else's
just
stuff.
to drive a point home, you lived in a home for 3 years
Yep.
and the home was sold for 100,000 more
Yep.
than what they bought it
100,000 more
for.
than what they bought it for.
So just for people out there,
Yep.
pay attention to that. The other thing I think is crazy is that with, most people have like a 401k or they do some kind of stock investing.
Yeah.
And there's a basic principle when you're thinking about that kind of investing, and it's called dollar cost averaging. I don't know if you've
Mhm.
heard of this.
Yeah, yeah.
So it's like a principle, like most people would agree. Some people know you're if you're this person, I think you're a little crazy, no offense, but, they think they're smarter than the market and they can time the
Yeah.
market. Most people know they can't time the market. They just need to keep investing, and when the price drops, maybe buy more if there's a value there and the
Yeah.
company's not going under, because now you're getting it at a discount, which averages out what you paid for the other ones. When it goes back up, now
Exactly.
you own more stock and it's worth more. Um, so that's like a commonly accepted principle for investing that most people accept as like a law. That's
Yeah.
like, hey, I know I can't predict, I don't have a crystal ball. Like I can't
Right.
predict what the future is. But when it comes to buying a home, there's so many voices and so much fear that's like, I have to time
Yeah,
the perfect
perfectly.
situation, which you almost never will.
No, I mean,
And
the thing that really pushed us over the edge is honestly looking at the past. It was like, okay, we waited for interest rates to go lower. When interest rates went lower, we went to buy a house, except all of the houses were that much more expensive now.
mm,
Now the $200,000 house that we saw, you go to put an offer in and it's $300,000 now all of a sudden. So it's like that's
yeah.
not a great deal.
No, and that was
So
before, just to point
yeah,
out, that was before we missed all these sales from having
yeah,
elevated rates. So
exactly.
now, whenever we get lower rates again,
Can be the
now
same thing.
there's many more people that are going to try to get back in at the same time and buy the
Exactly.
same houses, which is going to push the prices up,
Right, and then
which
you end up paying the same at the end of the
or
day,
more.
so
You
it
could be
evens
the
out.
same or more, and
Yeah,
then you wasted that much more time renting something. So these are things that's like, if you look back at historical sales since 1954, home values have only gone down a handful of times. So every other time it was either flat or a small gain. There were some years where we had really big gains. The only year that we had a double digit loss in home value was 2008.
yep,
The rest of the year, so it's literally like if you're gambling with the worst odds. Like
pretty
if you're
much.
trying to time the market, it's like, and what you said is so true, and I think it's going to be twice as bad this time whenever rates go under
Yeah,
6 and
everybody
stabilize
who
there.
missed out before will be in
There's
there.
tens of thousands of people in every market across the country that didn't do a move, that's been waiting for lower rates,
Yep,
and they're all going to get in roughly at the same time, and homes don't just fall out of thin air.
no,
So when you have the supply being the same and then the demand doubles,
yep,
the
things
only
yep.
thing that could happen to price is it goes
Supply
up.
it's
Think about,
simple
you own
supply and
something.
demand economics right there.
Yes, and you own
Supply and
something,
demand
and
economics.
now there's people banging your door down to buy it. The
Yep,
only reasonable thing to do is
jack
to
up the
up the
price.
price until you run out of people. Okay, that's like an auction.
Which
Like,
history tells us too, like I said, like, there's always gonna be something.
yeah,
Like, I think I've posted it on my social media a couple
yeah,
times too, where it's like, you take your pick. You've got low interest rates, you're gonna have high prices because you have a lot of competition. So,
and maybe worse
okay,
terms.
time that market. Now you can afford a $200,000 home, but that $200,000 home is 300,000. So now you're
Yeah,
buying a $100,000 home
yeah.
versus same thing. Now you interest rates are higher, but purchase prices are lower. So it's like you gotta pick your poison, but
The
really at
thing
the
is
end of the
that's
day, it's the
crazy
same.
is the rate. Okay, the price you pay is the price you pay. Like
Yep.
if you buy a home for 250,000 and you get a 6.5% interest rate, 30 years
Yeah,
fixed, and um, prices go up to 300 or 350,
you got that price.
you have to pay now 350 for that same home
Yep.
that a few years ago sold for 250.
We saw plenty of people who got stuck with that over the
And so
years.
if you have this, um, if you have the first situation where you bought a home for 250,000, and let's say your rate's 7.5, and rates go down to 5.875. Well, you could refinance that loan if you
Yep.
think you're still going to be in the house a while, but you're only going to refinance like 230,000 or 240,000
Yeah.
versus the person who waited to get 575. If they can get the house, maybe they're paying 3 or 325 or 350. Now they have to finance at the lower rate like $50,000 more of money, which you're going to end up like. So that's the thing that's
Get
like,
into that negative equity
yeah,
situation, which
yeah,
we've seen that a couple times in the market.
yeah. Which that's a
Yeah,
risk
yeah,
with they call that, analysts call that late cycle lending risk, to use like a
mhm,
fancy terminology. What that means is like if there's a cycle where home values are going up and you put a low down payment and then you need to sell in a short amount of time, or you get laid off in a short amount of time and can't find work, those are the foreclosures that you always see when you get a recession, and it's
yep,
always that late cycle lending because they haven't had time yet to build up the equity.
exactly.
Those are always such a small fragment of what the actual sales are that it's not enough to like crash value. So something else we've heard
Nah, definitely.
is like, oh, foreclosures are up. When people say numbers don't lie, you absolutely can make numbers lie because,
Yeah,
yes, foreclosure filings are up, bankruptcy filings are up, but they're still like below normal averages. And so when people hear bankruptcies are up, closures are up, they think 2008, it's happening again. I got to wait. I got to wait till I could buy a home for half off. What's happening in those numbers is that we're getting back to more historical norms.
yeah.
And so this is not like a crash. That's why you need to talk to a
Even
professional.
then,
It's
even
like,
then, I think I forgot when I pointed it out. I believe it was when the rates were going up and down last year. I had pointed it out too that one of the biggest problems that you see with what you see on the internet and stuff like that, and what probably 99% of people miss is there's a difference between, you know, what people are saying is up. You know what I mean? If you're comparing today to yesterday, things may have gone up. But if you're comparing from here to 6 months ago, things may just, like you said, be completely normal.
yeah,
So it's all how you also look at the data. And what I think we've seen and haven't, I personally think we haven't given enough credit to it, is there's a lot of manipulation of data out
yeah,
there
yeah,
as far as like, look, interest I mean, we see it even with interest rates.
yeah,
People are like, "Oh, interest rates are super high. They're super high. They're super high." Well, like, yeah, if we're comparing to like last week when interest rates were at a 4-year low, yeah, interest rates have gone up.
but when you zoom out to like a
Yeah, when you
1 year
zoom
look,
out
it's
to like
like
a year, like
it's
we're really,
stable to a
yeah,
little
we're
bit
not
better.
that bad. Like
Yeah.
we're really not that bad. We
And
went
most
up
people
a
don't
slight bit.
buy a home for 3 months.
Right.
Like, so it's crazy to make a long-term 5 to 10 year life decision off of a weekly news
Yeah, it's a
headline, you
small
know?
set of data,
Yeah.
but I personally dislike that a lot of the media out there does kind of shape it like that because you see it more often than not to where it's like a scare this week or
Yeah.
next week or whatever, which, I understand that part of it. But I think what most people need to really dig into more is really looking at those numbers more closely. What are those numbers compared to? What is the timeline on that? Um, things like that. Because, like I said, it's all about perspective. So if
Yeah.
you're looking at a very small perspective and you're looking at a 3-month window and you're comparing to where rates are today, if you hit a 4-year low, anything you compare to forward and behind that is gonna be
For a while.
worse.
Yeah.
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 So, like, unless you're going back further than 4
Yeah.
years, like, yeah, everything looks a lot worse than that.
Yeah.
But if you go back 4 years, you can see like, "Hey, look, this was a normal at that time, but for the past 4 years, that is not the normal. That is the outlier."
Mm.
So, if you're comparing the outlier of 1 week or even a couple days to the past 4 years, anything you compare that outlier to is just not gonna look great. It's gonna be worse.
Yeah.
So it doesn't really
Speaking
matter.
of outlier, something else that we've talked about a lot recently is we talked about this again at lunch today. We had so many good topics that came up. Is that people look when they're trying to determine is the interest rate too high?
Yep.
They're looking at 2 years, a little over 2 years from 2020 to really early 2022. I
Yeah.
think around
Yeah, I
April
think
is when
early
they started
2022,
escalating.
so
They're looking at those years, which are outliers. Like
exactly.
when I started the mortgage business in 1998, we would say we looked back at like a 20, 30-year history, and an average range of interest rates was between 6 and 8% for a 30-year
Yep.
fixed. Now, you could argue, which is not an invalid argument, that incomes were lower, home prices were lower. Um, However, the 3% 30-year fixed mortgage rate range is not a normal range over a long period
No.
of time. It's an anomaly.
Yeah, it's an
And you
outlier.
could see
Yeah.
what it did to drive prices up. It wasn't sustainable or healthy.
Yep.
So, a rate maybe for the price and the income that we have, we've seen the numbers already. The data shows when we get close to or under six, it unlocks a lot more affordability for people. And right now, we have more people that have a rate over 6% than the 3% group. So that's slowly shifted over the last 4 years. And so those anomaly situations are slowly working out of the system. But those are
Yeah.
important things to remember when you're trying to make a big life decision, because that irrational fear of rates being too high is blocking so many people from being able to take advantage of all the beautiful benefits of homeownership.
Exactly.
You've got, for most people, a tax advantage on your income tax. You've got, not only depending on, this is not tax advice, you probably can deduct your mortgage interest. You can, I think, almost always deduct your property taxes. Then a portion of your payment is reducing the principal. And then the biggest one, especially in the first 10 years of the loan, is home value growth by appreciation.
Yep.
And even if you're only getting 2 or 3% appreciation a year, if you do the math on that, if you're buying a $300,000 home, you're making 2 or 3% on 300,000,
Yeah.
but you didn't
Good
put up
amount. Yeah.
300,000.
Exactly.
You
For
put up
sure.
maybe 30,000.
Yep.
And so when you do the rate of return on 30,000, which is
Looks
really what you
awesome.
put in, I don't know where else you do better than that and have a tax advantage and give your family a stable place to
Yep.
grow up. Um, I can't
And then you're
mathematically.
still just putting, like I said, you're putting money into something that's yours.
Yeah.
Like that was the biggest thing for me was
You like were having homeowner responsibilities
yeah,
with like
I was
renter
yeah,
benefits.
I
I was
was
like a
so
bummer.
ready just personally to have
Yeah.
the home ownership, and I you know me, I like doing things like
Yeah.
that too around the
Not
house.
yeah,
So
that's a good point. Like
it's
not
like,
everyone would be able to even do the
yeah,
repairs you had. So imagine that. Now you're renting and you don't even know how to do the repairs and you
right.
can't, like, are you going to call and pay someone money to do the
Yeah,
landlord?
pretty
Like that's
much.
crazy.
Yeah, I've seen people doing that lately. I know now the landlords have straightened up
Mm,
and they'll make you call somebody to come out and you have to pay them to do it if you want it fixed, if they
that's
refuse.
wild.
So it's nice and it's nice to do things like if you're in a rental house, like I know my wife wanted to paint the house a different color, you know what I mean? But it was like, hey, it's not our
Mm.
house. So it's like we're gonna spend all this time and effort and money on painting a house that we're gonna leave in a couple of years. It's just not the same versus if you have your own things, you can put your own touch on it.
Yeah.
Um, you can paint it, you can make it yours, you can personalize it, you can do whatever you want. You have that freedom, which
Yeah.
you don't have. So besides the money aspect and everything like that of a home, I think that's an aspect that a lot of people miss too, is it's yours. That's the whole point. Is no matter if it makes you money, if it doesn't make you money, whatever, at the end of the day, it is your home to do with what you want to it for once. And
Yeah.
if you put money into it, you have the potential to get money out of it. That's a secondary thing. But at
Hmm.
least it's yours. So if you work on it, you put your time and effort into it, it's almost like running a business. It's having a house is like you're putting your time and effort into something that is actually yours that you own versus putting your time and effort into something that you don't.
Yeah.
Even like we said with ours, that company sold the house for 100,000 more, and I
Mm.
probably put $10,000 into that house over those 3 years, fixing stuff and all that, just because I didn't wanna wait. If the water went out, if the toilet's clogged, something like that, I didn't want my wife to deal with that
Yeah.
for a week, things like that. It's crazy.
That is crazy.
So it's like I'd rather just spend the money and do it and get it done so we don't have to deal with that inconvenience. And that's what it comes down to. But I'd rather do that on my own house and on my own possessions and fix my own possessions versus, again, somebody else's.
Yeah.
So that's another thing I think a lot of people miss. I think they get very dialed in on the money aspect of owning a house. And I think a lot of people forget that owning a house is just it's something that's yours
Mm.
to take care of and to care for and things like that. Like,
How does it feel? Let's talk about that because we talked a lot about numbers.
yeah,
Okay. Um, how does it feel to own your home versus when you rented?
it's a whole different feeling. I love it. Like I always wanted to be a homeowner. I always pictured moving into a neighborhood and taking care of my lawn. I grew up like that too. My
By the way,
dad
you
always
probably
cared.
have 1 yard of the month, like, every month since you've been in your
Pretty much. The
neighborhood.
whole
Like,
put it
this
this way, the whole neighborhood knows exactly who I am
yeah.
because me and my neighbor across the street, always outside taking care of our lawn. It's always green. We're always doing something. We're on the roof, blowing the roof off, things like that. So the whole neighborhood knows us as the crazy two. But it trickles down too, because we end up helping a lot of the neighborhood as well.
Mm,
Like we've helped a couple of our neighbors install stuff and things like that they just can't. They're older. Um, my neighbor Tom actually just helped the lady across the street. She's an older lady and she was trying to move into this new house that she bought.
mm.
He painted the whole house. He redid her bathrooms,
Wow.
basically did everything for her and helped her get all that done. Um, so it's also you have a community there too. It's
Mm,
nice to go outside and have people that that care for you, that help you out when you're in certain situations, um, and things like that. So there's more to a home even to just owning it. It's a different feeling. Like my lawn is the perfect example. My lawn, I always wanted a lawn. Even in the older houses, I always held back because I used those houses. I feel bad because I used the old houses we own to mess up their lawns because I knew it wasn't mine. So that was like the practice, you know what I mean? So that way I didn't
That's how you
mind
became
as
a
much.
professional.
Exactly. So I was like, I'll mess up all these lawns, figuring out how to take care of it. So when I get mine, I'll know exactly what to do. But it's just nice. You put your time into
But how
something.
does it feel to pull up to you like, compare how it felt to pull up to the home that you rented
I don't think there's any
with
comparison.
the grass, how it looked, the paint, how it looked, versus now visualize yourself driving up to the home that you own that you've like perfectly manicured the yard, the house color is what you want it to be,
There's
like the
0 comparison. There's 0 comparison because everything is mine, so every time I pull in, I look at all of my hard work. That's what I see.
mm,
Whenever I pull up, I see all of my hard work, not hard work I put into somebody else's things. It's my hard work. Like, I painted the whole outside of the house. We've done all new landscaping outside, lighting,
yeah.
all kinds of
You are the
stuff.
lighting king, man. You have like so
I'm
many
getting
cool
there.
lighting.
I'm
You
getting there.
inspired me with a
You're
lot of the
starting to
lighting.
take over a little bit,
Yeah,
I will
I
say.
have.
You started to take
You
over a little bit. I
inspired me.
gotta take the
You
crown
did.
back as one
You
of these
did.
days. But it's just different, you walk up and you see all that time and effort you put in,
Yeah.
to something that you care for. It feels there's no comparison whatsoever. And that was my main point is everybody looks at the price, but I like that you brought up the feeling because the feeling is completely different besides
Which I'm not
the income point.
proposing or suggesting people do something for a good feeling that's terrible for your
Yeah,
life. But I think it's also fair to point out that these are things that people just like crunching the numbers.
yeah,
the numbers are important. That's our lane,
Yeah,
right? Like we live there. That's our world. But it's also real that it hits different when
yeah,
you pull up
different.
to your house and your yard and you know you were fixing that busted sprinkler last week
Yep,
and now that you fixed it, that whole section is beautiful again. And it
yeah,
just there's something different about that. And meanwhile, you're making like tons of money on equity over
exactly.
time. You're paying
That's the
down your
nice little
mortgage.
extra bonus pay on
And
the
you're learning
side.
stuff. You're
Yeah,
having community. So like these are all different aspects
yeah.
of owning a home, being in a local community that I think that we don't maybe talk about enough as an industry
No, we really don't.
because those are real things,
Yep.
you know?
Everybody focuses on numbers, I think.
And the other things, speaking of numbers, now I don't want to get too long on this before we bring it home and wrap this up.
Mhm.
Renting, like something, another really powerful thing about owning a home is the United States is one of the only countries in the world that has a 30-year fixed mortgage option. So, um, over time, with just natural inflation on your income, if you're employed, your income will go up some every year. But your payment on a 30-year fix stays roughly even. Your homeowner's insurance may go up, your taxes
Really?
may go up, but it's such small portion of your payment that it
Yeah.
doesn't really impact that way. So imagine, think about what you paid for a 12 pack of Coke Zero 5 years ago versus what you pay for it today. It's about double.
Yep.
I know. So,
I mean,
okay.
we can use my rental
So
house as another example on that too. When we
rent
re
goes up was my
yeah,
point in saying
uh,
that.
best example, when we moved in, we were paying I think it was paying $900 a month. Started out $900 a month. When we moved out, they charged they were going to charge $1,650, and they ended up getting a renter in there at $1,800 a month. Double.
So double.
In
Okay.
3 years, they
So
doubled it. They were raising it, I think, $100 a year, and then the last one that we had enough, they wanted to raise it 250, and we were like, "We're
So
done
that's
here."
like A, you could probably be paying a mortgage for that, which is
Yep,
ultimately where you guys got
yep,
to. But something that I don't think is considered enough is, and this goes back to the feeling and the experience, is
yeah,
like if you want to be near certain shops or certain restaurants or whatever, close to the beach or the lake or wherever you want to
yep,
be close to, and you rent a place here and you're paying X a month in rent, you're kind of at the landlord's mercy. I've heard some weird
yeah.
anomalies where the landlord leaves the rent the same for a long time because they like the people, but that on average is not what
No, that's
happens.
usually not the
The
case.
landlord is a business person just like home builders. They're not the March of Dimes. They're a for profit. They bought that rental home and they're paying the mortgage and the upkeep because they want to make money. And if they can get 1,600 or 1,800 instead
They're
of
going to.
900, they're going to try to get it every single time. And so, what does that mean for your life? It means maybe you have to move 30 minutes away or 45 minutes away from the stuff you want to be close to
Yeah,
in order to keep your payment the same versus that 30-year fixed rate mortgage. Your changes in payment from taxes and insurance are going to be so minor compared to the rest of your payment that you have so much more stability and
exactly.
predictability with your payment.
I mean,
And
we've heard the stories of landlords raising the rent $500,
yeah, and
$500 plus.
$500, I mean, that's too much for a lot of people.
Yeah,
And then
that's
what do you
crazy.
do? You
Yeah,
know, and you're in a
you gotta move
situation where
out.
you are not the boss of your life,
Exactly.
you know, which is a tough place to be if you're a grown up.
Yep.
You're like, okay, I actually have no control over this
Yeah.
situation
It's
of
just
how
not
much the
good.
biggest bill I have a month is going to be next year. And so these are things that are real, man. These are things that people would
I
be
think we went
wise to
deep.
think about.
I think we found
Yeah.
a new, mortgage motto out there
Yeah.
that people need to stop focusing on rate and start focusing on a little more than that
That
and
backyard
what it really
barbecue,
means.
that
Yeah,
pool party, like,
exactly.
the
There's more to owning a home than that. You of course, you can rent a home, but I feel like most people, if they realize, yeah, you're partying in someone else's backyard, though, at the end of the day, you really partying in somebody else's backyard. You may live there for the time
Yeah,
being, but you're partying and having that barbecue in someone else's backyard
yeah.
versus your own and having your own family over to your own home and all that. So while renting is good, obviously, for certain people,
Or for certain
um,
situations, and
yeah,
we're
certain
super
situations.
transparent about that with
Yeah,
people. Like, if we really think that now isn't the time, or if you did X, Y, and Z, like, in 6 months,
yeah.
you'd be in a meaningfully better we are not the people that are like, "Everyone should buy a home all the time,
We're not
like,
gonna
let's
be a
get into
yes
a
man.
house." Yeah,
We're gonna be a yes
it's
man
just
to
it's
everybody.
not every time, it's not the right time
No.
all the time. There's definitely seasons and situations where it could make sense. If you're a travel nurse and you're here only 6 months and you don't wanna buy it as a rental property to keep, like, maybe that's someone who should
A
rent
home
and
shouldn't
not.
make you. I think I had a couple situations last year where I told the clients, like, "Look, it's better for you to get in a better position before you do this because you don't wanna force buying a home either.
Yeah.
If that home is gonna drive you to be broke, if that home is gonna, really."
Or you have, like, no money
Yeah.
to ever, like, order pizza or
Yeah,
something
exactly.
like that you have to, like.
If it's gonna really actually, like, there are plenty of cases where people could buy a home. Is it the smart move? Maybe not for that person. So, like, that's also another thing that I think we pride ourselves on too is just
100%. And we're not telling
yeah,
people what to do. We're sharing what I feel like we do a really good job with, is we're not telling people what to do. We're giving them the lay of the land. We're
yeah,
giving them the data
exactly.
transparently, what it is, and then they can decide. We're not forcing people, or
Yep.
we're like trying to convince people
No.
to do something or to buy a home at all costs, buy a home because, you know, you have to
It's up to
live,
them at the
you
end of the
know?
day. So I
Yeah.
like that.
Yeah.
I like the way our processes is set up that way to where,
Mhm.
I mean, we say it plenty of times. We put the ball in your court.
Yeah.
We'll give you the tools to make the decision, but at the end of the day, it's not my call whether you want to buy a house or you want to rent or what you. All I can do is give you the data to make an informed, accurate decision on what's best for you. Everybody's what's best for them is going to be different.
Yeah.
So if I can give you that information to make a good decision, I've done my part of the job at the end of the day, and
Yeah.
that's what matters most to me, at least.
I love it. Well, we're just two dudes here talking about how it feels to buy a home, and,
Yeah,
we talked a lot about numbers. This was a lot of fun. We'll
yeah,
definitely have to
it's a good
have you
one.
back on the show. Thanks for hanging out with me for a little over an hour, it looks like.
Yeah, we
So,
went a little longer than we
yeah.
thought, but that's
Yeah.
okay. I think
Any
we got
final
into some
thoughts or
good
anything
talking.
that you wanted to share as a
No,
closing thing? You feel good?
yeah, I think we were good.
All
I think
right.
that was great.
Fantastic. Well, thank you all for tuning in to another episode of the Made to Be Great podcast. We are here to help and serve. I hope this episode helped you. And if you would share this with someone who you think could be helped by it, we would certainly be grateful. And I hope you have an awesome rest of your day.
You were made to be great. Don't settle for less. You were made to be great. Don't settle for less. You were